Hi everyone, welcome to Friday. It's the end of the week, Friday the 12th. Today we've got we've had quite a lot of interesting data this morning from Europe. Inflation, some production and manufacturing data, industrial manufacturing data from the UK. But the main data is the University of Michigan, their inflation expectations, and more importantly, their consumer expectations. Both expect to, certainly consumer expectations expected to slip. It's the first reading. It's the second reading of the September data. Later on, we got the key CFTC net positions from the speculators, both the big and the small, to close out the week. And what a week it's been! Interesting situation with PPI cooling, CPI in line with expectations. There was a part of it there that was actually hotter than expected. Then we had that massive, or not massive, but how the markets taken it as that big. Where were we yesterday? It was Thursday. It was, wasn't it? It's 265,000, 263,000 here. For the weekly initial job claims. It's obviously just 1 week. It may be an outlier. It may not be an outlier. We saw the graph yesterday spiking quite high. So we'll see where we go. We've actually come down in the expectations for cuts. I mean, tomorrow, next Wednesday is nailed on. 25 basis points. The talk of 50 basis points is still kicking around. We've still got a potential, but that the actual expectation for that, if I just bring up all right. Sorry, I was reading another headline. It just came across the ticker there in front of me. The expectation yesterday dipped. We went from 50. We were at 7.2% earlier on in the day for 50 basis points. We're now at about 80%. Actually, I'm reading that wrong, aren't I? That doesn't make sense. That's from 50 to 75. 8.2% for a 75 basis point by October. I've written down here, so I've got the wrong sort of data. But let's just come back. That's what I was talking about. Yeah, so this has come. The chances of this has come down from 8.2 to 7.6 of a big 50% basis point. 7.2 earlier, went up to 8.2, 8.6 at one point, and more, priced in for the definite cut next week of at least 25 basis points. So the issue is, obviously, is this the start of the cycle, which obviously normally is the normal procedure, and it looks like that is going to be the case. So if we project forward another 6 weeks to the next meeting at the end of October, what the CME Group market expectations now is looking at is a 15% chance of a no change from where we are, and another 25 basis points has a 78% chance. But a chance of a big jumbo 75 basis point cut from where we are now is now sitting at 6.4%. And again, that's cooled from 7.2% yesterday, and 7.2%. So it's come back quite a bit, and see how we cooled yesterday as well. So 8.5% a week ago, back to 6.4% and 5%. So it's ticked up a little bit overnight, but certainly this looks like the beginning of the cycle. Obviously, there's obviously all the politics that's now surrounding the Fed. Regarding Lisa Cook and Stephen Myron. It looks like Myron will be confirmed on Monday night, so he gets shoehorned into the meeting on Tuesday. Obviously, he's just one voice, but he's a very obviously he still works for the government. He still works for President Trump, so he's obviously going to push that narrative of moving faster and quicker and more aggressively. But generally, the whole of the Fed might be moving that way. More hawkishness as well. However, inflation. Inflation. They keep talking about the CPI data yesterday, as you can see here, 2.9%, 3.1% for the core. Remains sticky, sticks around. It hasn't come down. It didn't come down. However, having said that, again, remember PPI feeds into CPI. The day before on Wednesday, where's our PPI gone? On Tuesday. Was it Tuesday? Oh, dear me. Where's the American PPI? There we are. The PPI data was much weaker than expected. So that is still to feed through the system. So again, the administration is still arguing for significant rate cuts starting in next week with 50 basis points is what they would like to see. I'm sure they would like to see that. But obviously the flip side is the data from the tariffs is still starting to just feed in. We're only 3-4 weeks into the full impact of the tariffs. So we'll see. Obviously, in the hard data, the data is about to drop. Is obviously sentiment data. It's soft data, but it has been key for positions in the past, and we'll see what that looks like. So let's just bring up some charts where we are this morning. We've got a bit of a stronger dollar actually today. Euro having breached the key 117 this time yesterday, got as high as 17.50 and then gave up the ghost and came down this morning on the inflation data. We'll come back to the European, but holding 117 going into the weekend. Oh, there we go. We'll be okay. If we just take this up to the daily time frame, see the sort of sideways action we're in, but we're still biased to the upside. This is the purple. This is the TEMA and the moving average adaptive, the MAA, which measures volatility, and we're still biased to the upside. Obviously, we went up to 1775 on Tuesday, and yesterday we went down under 1700, quite significant, to 1656 before we closed back over 117 yesterday into the afternoon. So again, you can see we're sort of just biasing above the 117 level. We hold this; it remains euro positive following the ECB's no change announcement and Mr. Lagarde's interesting press conference that followed. But you can see here, as far as trends are concerned, we got a very flatlining MMA, and therefore not much volatility. Although the triple is still it's sort of moving to the upside, so bias to the upside if anything on this strategy here on the euro. Aussie has had a really good run this week. We'll come back to that in a minute. Let's go back to the calendar. This data's about to drop. Is it going to update or do I need to refresh? Looks like I'll need to refresh. Just do today. It might actually flipped it and I would click today. There we are. So inflation expectations bang in line with expectations. The 5-year has ticked up relatively significantly at 3.9% from 3.5%. So inflation still at 4.8%, so way above where we are, and consumer expectations have shrunk quite significantly. So the impact of the tariffs is beginning to hit and weigh on expectations and sentiment here. And the very authoritative, really, University of Michigan consumer expectations and consumer sentiment program. So 51.8 from 55.9 last time, and 55.4 for the sentiment reading from 58.2. So that's quite a significant miss. It's still a miss. Even these sentiment indicators, because they can be quite volatile as well. Let me just switch to that other light. So excuse me, I've got the light in my eye here in the. I'm actually in my home office today on Friday, so that light looks a wee bit better. There we are. A bit darker. So, guys, as usual, if there's any particular asset you want to have a look at, we'll go through the majors. We'll go through what sort of week we've had and what we might expect next week as we go into the second half of September, which is traditionally very volatile. September can be volatile, but the second 2 weeks of September can be particularly volatile. We are long at the moment all the US markets, including the FTSE here in the UK, and we're very much in the money on those 3 and 4 positions. Having had a very volatile week last week as well. I will update that. I've been promising that for a while before the weeks before Friday closes. I'll update last week, but we were actually in the money in the end. We lost 300 odd points on a Dow trade, but a mighty 4.4% move, I think, in gold saw us very good for last week as well. So that's quite a significant move down. Let's have a look what the euro's done immediately. Absolutely nothing by the looks of things. Let's go down the 5-minute chart. Dollar has weakened initially. So there's that flat move. So here, if you were trading with this strategy, you'd have been long here, you'd have been short from 12.15, trading, strolling, trailing your stop loss down. That's a big move down there at 130. I would have probably moved about halfway down and got stopped out on there. So that would have been a nice move. That was a positive move back up, which then flattened out and stopped. So that would have been a losing trade really about there, out there. And that would have been, again, head of the data at 14.40 there. This 5-minute TMA, MMA strategy would have taken you long here with your stop loss down here at the moment. So we would have gone long there. All these lines aren't going to work, are they? Keeps taking me out, but there we go. So long there, stop loss there. Oh, this platform is driving me nuts at the moment. I don't know how any of you others feel, but that's our risk. So we're more than 1-to-1 risk reward. ATR is say 5 pips on that, so we're very much in the money. So now, having gone long here at 50, obviously the data could have gone anywhere, but certainly we were above that level. My stop loss now is right. I'll have it here, so I'm in the money. There we are. I haven't actually set a target, but we're running into a resistance area through here. So there we are. Bang, 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 out there. So I'd close that out 117.23 from an entry at 117.30. 117.13. What was that? 117.13. Yeah. So a nice 10 pip move there on the euro. On the news, certainly I would have closed at least half out because I'm not being too greedy. It's Friday. We've had a good week. Now happy to move my stop loss up now to the next level there. So we just that's our stop loss. A darker colour so you can see it. There we are. Okay, these lines aren't going to remain because of what's going on. I hope you can see all that, but that's where we are. Let's get rid of that there. So that's played out quite nicely from the low down here. So stop loss here, entry was here. Half of the position, say, closed out. You can see where we closed out there. Hope you can. This area through here, top of these candles here, bottom of these candles there, top of that candle there, bottom of these candles there, that pivot area there. So we got out at there. So I actually just put that line in for the sake of completeness. So that was our take profit area from the earlier move, and we are still change that to dark blue. So that's our profit area. That was green for go here. I'll change that to a green. There we are. Green for go here. We've gone above the 2 of the moving averages, although it's still flat line. It's still precautionary, like that short there that didn't work out. This one has worked out on the news. So we've got a weaker dollar on the weaker inflation reading and consumer expectations. So half of it's closed out for whatever it was, and we've still got half the risk on the table. See if we can move higher. Obviously, next upside target initially with these candles here, which we have rejected at 117.25. So we haven't got to 117.25 yet. Our upside target with these this high here this morning at 17.35. So another 10 pips to the upside would be the ultimate target this afternoon if we can move to that level. Let's put that through there. There we are. That's our next upside target. As we got out, we actually got out there, didn't we? Did we get out there? Yeah, sort of just the top through there, wasn't it? It was the top of the literally at the top of that spike. Now is where we first got out. Our stop losses may come back to get tested here in 10 minutes. But you see the euros, say holding 117. Anything above 117 remains positive for the euro in the higher time frame. So let's have a look at some other assets as we wrap up the week. So that's the euro, yen 147.63. We had a losing trade on that earlier on Monday, rejecting. So it's a 5-minute chart. 148 a couple of times this week. Actually, let's go back to this. Go to the daily. We're doing a review now, aren't we? We've got the move. So again, sort of sideways action. Big support during August for one at 147. That's held so far in September, and equally, we really can't break and hold with any conviction above 148 to the upside. We did get a bit higher, 148.50. We even went to 149 intraday towards at the beginning of the month, but certainly that's 148.35 is the next resistance if we can hold on an end of day base above 148. But at the moment, we're biased to the downside. That this strategy again, it's not trending, but it would have triggered a short position there on the 5th on the close, and it's just about it's not, it's out of the money again. But the flatlining would keep me out. Really, the flatlining of the MMA or the MAA is just, nothing's happening. We're sidelining 147. We don't want to sell 148. We don't want to buy. So play the range, guys. Play the the mean reversion as you get to the top and the bottom of that range. Certainly buyers out in force down here. There was a communique this morning from both Washington and Tokyo about the forex, the FX positions. Obviously, the Bank of Japan, one of the most, probably the most not influential, but the one that interferes with their foreign exchange more than any of the other major central banks. And you can see suggestion of supporting this dollar yen trade at 147 throughout the summer here as buyers down at this level. So there we go. That range plays out. Continue for yen. Obviously, we've had the major political news in Japan as well. We've got this long end of the curve as well. The 30-year JGBs continue to rally and then cool quite significantly as well this week since then. So range bound. Dollar CAD, next one down our list here, 138.39. So dollar remains bid against the Canadian weaker loonie here from the beginning of the month. That trend line still fits. I say this strategy would have first went long here on the 4th. If you got your stop loss a bit too tight, might whipsawed you out there on the following day. But really, the initial stop loss should have been down here at the turn of the market. It's only 3 days behind you. But certainly now you could have your stop loss through here. And still good to go. Big down day yesterday, but we've bounced again today. So running out of steam on an end of day base at 138.60. Intraday high this week 138.89. So we couldn't quite get to 139. This range of higher highs and higher lows has broken down, and now we're in the next leg to the upside. You can see that quite clearly. Down, there we are, down, and next leg up. So if we put a little fib on that last range here from August 25 to the floor we had in at the beginning of the month, which is really is the floor for September, certainly 137.25. We are now back at the key and breached and then come back through the key 61.8 fib level. So that rally for many will be over, which presumably triggered some of the selling, technical selling yesterday on the 11th. But we're still holding, and we're now in the range, the 50 to 61 fib range. So that leg for many will have completed. Some still might be holding that, but here for this strategy, we take away taking the fib levels off that. We are still long. It's holding above the blue line here, the TEMA, so it's still positive. You see, it's been over the blue line all of this time, even when it came down. So it's still bid. It's still positive. So dollar is still up against a weak CAD, and Carney's come to scratch his head a bit about how he's dealing with the tariff implications from Trump south of the border. Euro, just have a look at. Aussie, as you say, is on a nice, fantastic run. as we mentioned earlier in the week. Main trigger was back here on the 26th of August, and then the crossing and the gapping higher on the 28th of August with this strategy. If you got your, again, if another one, if you've got your stop loss, you moved up a bit too aggressively. The fifth would, second in fact this time, would have taken you out, but you're continuing to bid up, playing with the TMA here, but bid through 65, through 65.50, through 66, and here we are yesterday and today. In fact, today we went even higher than yesterday at 66. 68.80. So this remains bid, the Aussie up against the weaker dollar. Sterling 135.58 at the moment. Another one flatlining, adaptive moving average. Big down day earlier last week on the 2nd. But since then, again, another one that's recovered. And again, another one that's looking like it might need a trend line on. But whether it stays on or not, it probably won't, because it's a bit steep, that one for me. Put it there from yesterday. 1, 2, 3 ish. Yeah, 1, 2, 3. That's probably going to lose that because I've reached my drawing limit. But you can see again over 135, hugely huge. I can't emphasize how significant the 135 level is for cable traders, guys. So we are up for cable as well. Kiwi and so again, next upside target would be these intraday highs. So we're not far away. We're testing a key level. So we've rejected it, and we're rejecting it at the moment. So watch for some weakness on there. But again, holding the triple EMA at the moment, and a break through 135.75, and a close on an end of day basis over 136. Let me just put that line in there. So say it's not going to hold horizontal line at 136. That's obviously the next area. 136. We're going to use this as our default. 36. Okay, and I'll make that a 2 so you can see it a bit better. So there's our 136 level, which we've rejected, as you can see here, on the daily basis from July the 24th, 14th of August, and here, middle of September as well. So could be looking for some short positions if this gets rejected yet again. But still bid at the moment. Don't panic. Don't jump out. Kiwi not performing as well as the Aussie, but another one's had a good week. It's on a bad day today against the dollar. I've reached my... but again, you can see that trend line remains to the upside now. Then this is probably not going to last. Given here, that's a 4th. Again, another quite steep trend line. So up to the upside. So again, another one that's come through and rejected a key resistance level here at 59.70. You see that quite clearly there, can't you? This was back in August 14th, the last top as we've gone down. So it could easily be moving lower again on here. But again, you see the legs down, up, down, retrace down. There's a floor, got lower. The low didn't get lower on this leg. This pivot point here on the turning point here on this the 4th. Well, in fact, it was the 5th at the actual turning point, and then we've moved higher significantly. So the bid we saw in the dollar is fading, as you see, against all these major currencies. So dollar remains it's having a good day today. If we just come back to the I don't know, let's pick one. This Kiwi one's is the one of the weakest today. We come back to the hourly chart. This big move we had yesterday and a big move down so far today. So long and then short this morning. Here, Kiwi, if you're trading that Kiwi into the daily trend line and bash through it and back to it. So we'll sit. There we are. There's the hourly. So it's still, if we hold this, move higher, we could be looking good. But again, on an hourly basis, this is short against the higher long-term daily upward trend for the Kiwi. Right, let's go back to the top of the shop. Crypto, as we said earlier in the week, has had a really good week. We're at 115,000 now. Let's go back to the daily. The key 112,000 was breached here on Wednesday. Big, strong, fat body candle, guys. Remember, the size of the candle is important. for direction. Looked like we were collapsing here back on the towards the end of August. Big strong down candle there on the 29th. I think this is a weekend, wasn't it? 29, 20, and then the Monday. It was a Monday. I can't remember, but yeah, Monday. It was the Monday, wasn't it? So we had a bounce back over the weekend, and then a week Monday. But since then, begin the low for September at 107,250 has been bought in. We had a strong day here on the 2nd, and now we tested, testing into the 112,000 zone for the first time. And then last week, 1, 2, 3, 4, 5, 6, 7 days banging into it, coming into this week. And it wasn't until Wednesday this week, where we burst forward. That would have triggered, again, this strategy would have triggered a long, it would have been long here actually, initially. It would have added here on Wednesday. And off we go, off and running. And there we got, depending how we finish today, but that's across, so you could have also added there. So certainly two very strong entries. This one, well, it's not a strong one because we were under 112, but it's a speculative one here, the size of the candle. We're still embodied by this down leg, so it's a bit speculative. Looked like it might have given up the ghost on the 4th, 2 days later, but certainly a strong entry was here on a Wednesday to the upside, and we're at 115,200. So despite the spread, we are still very much in the movement there. Remember the ATR for the crypto is huge, $2,700 on a daily basis. So it can move quite volatilely. But it's been a positive September from a weak second half of August for crypto. But remember what I said at the beginning, particularly the stock markets. The second half of September can be particularly volatile and particularly messy, i.e., people getting caught out in buying the tops of the markets or trying to chase things up. But we've seen some phenomenal moves this week. I mean, none more so when we're talking about individual companies and Oracle on Wednesday, when it gained 36%, and it made Larry Ellison the richest man in the world for a few hours, ahead of Elon Musk, before Tesla shares bounced back on Thursday, up 6%. So anyway, Bitcoin remains bid to the upside. You can see what a really nice support we've had from the blue triple exponential moving average there. So technically remain really nice and strong. The breach of 112 was really what got me excited on Wednesday, and added on the close there at 113,400. So a long crypto. I can't show you anything else because all I can see is Litecoin, and I can't see Ethereum for some reason. Well, I know why, but quite a volatile week as well for the oil markets. You can't really tell from this chart, but there's been all sorts of conflicting news around supply. The IEA said we're going to have a big surplus in 2026. More Russian sanctions came today from the UK. Russian oil still leaking out into the market quite significantly. India, China still not looking to cut purchases. But all of that sort of, and then the conflict building again in the Middle East, the issues over the attack in Yemen, all of that sort of contradictory price action, geopolitical information and data and news has just sort of bounced the price up and down. And so we've not really got any direction. So again, a flatlining triple exponential moving average here. This week it was relatively positive start of the week, and with big down day yesterday on that EIA news, and obviously the weak claims number out of the United States, and bounced a wee bit today. So where are we? We're at 63.60. So the 62 floor has continued to hold. So that's the big support zone where oil sort of is bouncing off at the moment. But future still looks fairly weak to me, to be honest. But if we look at the weekly chart for oil as we go into the weekend, you see that support is still holding at 62. But we are biased down to the downside, aren't we? You can clearly see that there's a huge week of sell-off we had at the beginning of August, and then obviously the monumental reversal at the beginning of at the end of June, and it's sort of midsummer, and we continue to move lower. So you look to the left and say, well, where's our next level? Well, 60, and then down here at that 56 level we got to at the beginning of the summer, at the beginning of May. So still looking biased to the downside, even though we're going into a big demand season, the winter here in the northern hemisphere. Benchmark Brent is trading at 67.80 at the moment. Similar pattern as you might expect here on the weekly chart, but not quite as solid support levels on Brent as we can see on WTI. For all you oil traders, I don't know, maybe actually trade oil. There's not many of you. I'll come to indices at the end. Metals, gold continues its bid, but we've rolled over in the shorter time frames, which is what we've been saying this week. So this is our weekly chart. We put this little wedge on earlier in the session yesterday, as we sort of before the massive breakout occurred. So we had potentially got a long way to travel still with the gold market. 3,825 is our next upside, my next upside level from this breakout here. So that's the distance here on our triangle takes us to 3,825 on the weekly basis. But what a month we've had of very, very strong rally. And I say we got 4. I can't remember that oil. It was last week, wasn't it? I just updated it. 4.43% gain on our oil trade. A massive points and pips gain. It was 100 and it's a ridiculous amount. 700. No. What was it? 782 points the second half of the trade. The first half of the trade had been like 15 points off. Okay, but it was the prices have been taken off because this market's as the system updated last week. Daily chart still bid. We say we've reset that. There we are. Bit of worry this week. We got a new all-time high on Tuesday again up here at 3667, and then we sort of looked like we were rolling over. Remember the 4-hour chart we talked about earlier in the week? There's that rollover we identified. There's the downtrend. We went under the 20 period moving average on the 4-hour time frame. Remember we had the Bollinger Bands on yesterday. We talked about this on here. It was here, wasn't it? On a 4-hour basis. First time, sorry, it's 1 hour. On the 4-hour basis, first time in a long time yesterday. But that was then recovered. So the weakness into the bottom of the Bollinger Band here, into that, you can see that nicely support there, 3,615, 3,615. Why isn't that? With the market charts around, but so it looked like a bit of weakness, and all it is a consolidation. You see now at highs, so we've rallied up, flattened, and now we know we've got the Bollinger Bands narrowing, and we're consolidating at highs. So we either consolidate here and move higher again, or we consolidate and we break down. But the first breach of the 4-hour 20 period moving average of the moving on the 4-hour time frame was short-lived. So we closed through it quite convincingly, and then it took another 1, 2, 3, 4, 5 candles before we broke back through it. So another day, another up move for gold. If we could take this to the daily time frame, you can see how massively away we are from the 20-day moving average, all the way down here at 3,478, and we trade at 3,653. So you can see that consolidation this week. Gold having hit new all-time highs on Tuesday, and still holding good. And the futures market's even higher. So huge move for the gold market. Continues to bid. Similar with silver. Perhaps not as doesn't look as aggressive. It certainly isn't aggressive, but we're over $41, and indeed today we are now over $42. So silver also bid. Copper had that big merger of Anglo American and Tech earlier in the week as well, consolidating and creating a huge mining, fifth biggest miner in the world now, if that goes through when it's approved next year. So silver with the commodity, with the weaker dollar, continuing to move higher. So stock markets, new all-time highs yesterday into close for the Dow, the Nasdaq, and the S&P 500. We were up 55.6587 for the S&P 500 yesterday. Let me just get rid of. I want to bring up the dollar index, but you can see our trades here on the Nasdaq from earlier in the week. I'll just bring in different layout, which is this one should be on here. I think it's on here. Yep. So this is our entry from the 4th of September. Very, very nearly got stopped out. We did get stopped out on the S&P 500, but the Nasdaq didn't. We managed to survive, and then we added again here on the 8th do we add again on Nasdaq? I think we did, didn't we? Oh no, it's the S&P on the 8th, not the. This is the Nasdaq. I might have got that wrong. The wrong arrow, but anyway, I'll double check that. But anyway, whatever, we are still in the money, very much in the money on that one, and that's where our stop loss is currently. It's moved this morning at 23,798 from an entry at 23,459. So what's that? That's 300 points. Take the spread off, and it's still a healthy gain on the Nasdaq. We may be dragging our stop loss up as we go into what has been a strong start to the day. Again, the FTSE is the other index that we've got open. Looked a bit iffy when we opened this back on the 4th. Our stop loss is all the way down here at 115 or something, wasn't it? I've dragged that up since. This lot sideways action. And again, another one, stop loss now above entry. So profits guaranteed. And another one, I should pull that up at least there now. I might get a bit more aggressive as we come down into the close of the week. Actually, let's put it up there. So we're still 1, 2, 3, 4, 5, 6 candles back. Yeah, so it's looking like they may have been running out of yesterday and down day today. So we'll see where that closes tonight. We're an hour away from the close of the cash market here in the UK. So again, another one with guaranteed gains. We got in at 9,230. Obviously, it's a while ago. Patience has been key here. From the 4th of September, 8 days later, here we are in the money by 55 points on the FTSE to the upside. There's the S&P 500. This was an entry, and the stop loss was on this day for the first one here on the 4th, and it did take us out that day. So, but it was re-entered, that one on the 8th. So that entry for the Nasdaq's not correct, I don't think, on the other chart. But anyway, certainly the Nasdaq we entered again. The S&P we entered again here. Another at the same price, virtually it's about half a point difference. 6,498. And our stop loss is here again now. And again, another one that I might drag up a bit later. I'm getting a bit too aggressive. Well, let's put it above there. So we're looking in some more profits as we go into the weekend. Obviously, anything can happen the weekend. I'll see what things are like. Obviously, Monday could be key. And whether Cook and Mirren are actually part of the Fed meeting next week, I guess it will colour things to some extent, but it's not really going to change. It's really the outlook and how Powell performs with regards to the cross question he's going to get from journalists about the outlook and the tariff implications, and obviously the cooling we've seen this week, in particular in the jobs numbers, particularly that weekly initial claims. Obviously, it's just one small data point, but we've had 2 consecutive big misses for non-farm payroll as well now. So see what he has to say on that on Wednesday evening. We're live for that. The Dow, another one. We went long. Oh, this is another one that's been open for ages. This is not yet. No, it hasn't. No, I think it was the 8th. So the 9th was the last time we went long on the Dow. Yes, 43665. I've got a note here. Yeah, 43665 or 45665. 45665. Sounds about. What time is that? It's 11 o'clock, isn't it? Was it? Did I do it during the day? I don't think so. Those numbers might be wrong. Oh dear, the link's dropping there. It's not good, is it? Hope you can still hear me loud and clear. But anyway, as you can see, very much in the money. And it's a one I actually set a target. So it's only half of that position open now. It hit target yesterday afternoon on open, which we rallied to new all-time highs again on the Dow, and it's cooled somewhat. So again, our stop loss has been pulled right up behind that to guarantee to lock in some more profits, even though we're at all-time highs on the Dow. So that's all very much positive stuff on the indices, and we've still got lots of chatter that we still could have some significant melt-ups from here. The IPOs in the US seem to be going very much to plan. Strong listings, strong performances on earnings, on debut. So euphoria is starting to creep in. So as I said, as I've touched on already 3 or 4 times today, beware for the next 2 weeks. But at the moment, let the trend be with you, and don't get shaken out. But it could come back quite aggressively, just as it's gone up quite significantly as well. So this is the daily on the Dow. Some big days, guys. So obviously, always be mindful of not having your stop loss too far away, and not too much risk out on the table at any one time. So the Dow, the DAX. The Dow, the Nasdaq, and the S&P 500. We've got skin in the game, and we're long, and we've got money in the table, and we have a big turnaround. So, oops, I've lost that. Hopefully, we got back. Are we back and working? My friends, hopefully we're back and running. Looks like it's a glitch. Don't know whether that was Restream, the trade locker, or indeed my internet here. But look, hopefully we're back and running. Nobody's said anything. Anybody here to comment? Who knows? Anyway, I was just about to wrap up. Anyway, I've been here 45 minutes. So let's have a look to next week. I say next week, obviously, the major. Let me just clear next week. So 14th, obviously, 17th is the Fed announcement. So we apply that. And I'm just going to filter this out again. We'll leave this on. Let's just leave this on. It's just major currencies. So Japan's closed on Monday. Chinese industrial data Monday, so relatively quiet Monday. Key data is it's becoming a bit more interesting. The Empire State Manufacturing Index, very volatile. The Richmond and the Philadelphia Manufacturing Indexes, but we'll be live for that on Monday, the 15th. Just kick it off. Quite a relatively quiet week. Save what the Fed are going to do. What's going to happen? Jobs numbers out of the UK. There's been some really mixed data from the UK. It's had a poor data dump this morning. ZEW from Germany on Tuesday as well, and then prices. Retail prices, retail sales from the US is the major US data for Tuesday, the 16th. Obviously, Wednesday is packed, actually. Anyway, we got inflation from the UK ahead of the Fed. Anyway, we got the Bank of Canada rate announcement. unlikely, not moving rates here on the 17th. And see what the press conference holds up earlier in the day. And then we've got the statement, but also the projections and the dot plots and everything else that goes with it, and the press conference later on from the Fed. So it's expected that we will see a 25 basis, as you can see here, at least a 25 basis point cut. How much chatter from people like Waller and Bowman and Miran? Interestingly, if he's on the panel, she's non-voter, will be interesting to see what it's said, and then how and what Powell has to say, and how he handles the questions later on after the announcement. That's 30 minutes later, the actual press conference. So key day next week is obviously Wednesday, and the Fed announcement, as well as the Bank of Canada announcement. Thursday brings us the weekly claims. We're also ahead of that. We've got the Bank of England, another quite significantly divided, or has been in the past, significantly divided monetary policy committee from the Bank of England on Thursday. Philly Fed initial jobs claims. Remember, we had that big surprise at 265. Is it going to show another week above 245 number Thursday? So Thursday is super key as well. And inflation from Japan overnight. Core retail sales from the bank from the UK on Friday. Inflation from Tokyo, but then the Bank of Japan again painted the sales very much in a corner, unlikely, not in a position to actually raise rates as they wanted to. The yield curve seen to that. And Canadian retail sales. So quite a busy old week. Plenty of volatility. Traditionally comes this week, this third week of March. So buckle up, guys. There's always opportunities around, and with opportunities comes risks, obviously. And if you are trading with us, one of the beauties of trading with the proptrade.com is we are very transparent. We are very open about our setups, our challenges. Most of our customers use the standard two-step challenge. It's a bit less aggressive. You got easier or lower targets than the one step. People in a rush jump into the express, but 8% profit target, down from 10% here on the phase one standard. Maximum loss 10%, so that's looking relatively easy. So 8 and 5. You see, if you've got the express one step, you've got a 12% profit target, and your daily loss is only 4%, and the maximum loss on the account of 7%. So be careful what you wish for rushing into things, guys. Remember, we still got our buy one get one free, but basically get a $10,000 account for the price of a $5,000 account. So our $10,000 accounts is typically $85. The $5,000 is $55. So if you do five, is it 5 for 10? I can't remember. I'm not sure that's right. No, it's not. I've forgotten. I should. Is it? I can't remember. Okay. So anyway, that's if you got that down at that there. If you're new as well, new 25 still works. I know that for a fact as a coupon. New 25, there we are. So 25% discount off whatever size account and whatever type of account, whether it's Pro, Express, or Standard. Again, I can't advise you what to do. I shouldn't be telling you what to do. But if you want to trade with a significant account, look at 25,000 or 50,000. That's why the 25,000 is the most popular. Gives you much more equity to play with than a 5 or a 10 account. And it's not too much to get carried away with. Somebody was asking this morning about some massive, he'd opened a massive lot position and clearly not understanding what he was doing from a risk point of view. So I'm sure you might have done, but it's it's very much a gambling mindset, that using lots of that size, and eventually it does catch you up. That's 99% of my experience shows that gambling with a gambling mindset doesn't last very long. in the trading world. You can do well for 6 months, a year, a couple of years, but it soon catches up with you. But anyway, so if you're new to the proptrade.com, new 25 gets you a 25% discount off any size of our accounts. I will see you all on Monday. Take care, be safe, and have a great weekend, everyone. I'll leave you with, sorry, what's happened there? The Dow's gone. Let me leave you, leave you with, oh, dearie me, platforms playing up yet again. So I'll leave you with the Dow up. We're nicely in the money on that. See if we stay in the money. Okay, take care, everyone. All the very best. See you soon. Goodbye. Have a great weekend. Bye.